Okay, it's that time of year again. You know the drill. You've got that pile of slips growing on your desk, that deadline is looming, and maybe, just maybe, you're feeling a little bit of dread. But what if I told you that your tax return isn't just some chore you have to get through? What if it's actually a powerful tool for understanding your own finances? Well, today, we are going to demystify the Canadian T1, and I promise you'll see it in a whole new light.
Does this question kinda make your stomach drop? Yeah, you are not alone. That feeling of being totally overwhelmed is exactly what we're gonna tackle head on. By the time we're done here, you are gonna have a crystal clear roadmap to get through tax season with confidence.
So here's how we're gonna do it. We've broken it all down into 6 simple parts. First, we'll decode what a tax return even is. Then we'll dive into what I call the 3 pillars, the real heart of your T1, your income, your deductions, and your credits. After that, we'll talk about those all-important deadlines, and then we'll tie it all together so you can see how this fits into your larger financial picture. Ready?
All right, let's start at square one. Before we can get into any strategies, we've got to understand the playing field. So what exactly is this T1 form anyway?
Look, on the surface, the T1 is just a form. It's paperwork. But I want you to think of it as something more. It's the financial story of your year. Seriously, it's a record of all your hard work, your investments, and, this is the important part, all the opportunities you have to keep more of your own money.
Now, this financial story of yours really has 3 main chapters, or as we're gonna call them, 3 pillars. It's actually pretty simple. First, you tell the government what you earned. Step 2, you find ways to lower your taxable income. And finally, step 3, you claim credits to slash your final tax bill. So let's get into that first pillar, your income.
Okay, pillar number 1 is all about reporting your income. This is where you lay all your cards on the table, so to speak, and show the government what you earned over the last year.
Now, the good news here is that you don't have to pull all of this out of thin air. Most of your income is already summarized for you on these official tax slips. You know, your T4 shows what you made at your job, your T5s and T3s cover any investments, and a T4A will show your pension. Now, if you're self-employed, you do have to be your own bookkeeper and report those earnings yourself.
All right, now for the fun part. This is our second pillar, deductions. This is where you really get to play defense and strategically shrink the amount of your income that actually gets taxed.
So how does a deduction work? Well, imagine your total income for the year is a big pie. A deduction is like taking a slice of that pie and setting it aside before the government calculates its share. Obviously, the smaller the pie that gets taxed, the less tax you're going to pay. Simple as that.
And here are some of the most common ways you can slice up that pie. RRSP contributions are, a huge one for a lot of people. But don't forget about things like any union dues you paid, childcare expenses, or even the cost of moving for a new job. Each of these can add up to some pretty significant savings. Okay, on to our third and final pillar, credits. And this one is a big deal because credits are, in a lot of ways, even more powerful than deductions. Think of them as a direct discount on your final tax bill. So if deductions shrink the pie before it's taxed, tax credits are like a coupon you get to use right at the checkout. They give you a direct dollar-for-dollar discount on whatever tax you owe. It is literally like the government giving you cash back.
And I'm sure many of you are going to recognize these, right? If you've paid tuition, donated to charity, had some big medical bills, or even just bought a monthly transit pass, you could be eligible for a credit that directly lowers the tax you have to pay.
So let's just recap this because it's a really crucial difference. On the left, you have deductions, right? They shrink your total taxable income. Then on the right, you've got credits, which give you a direct discount on your final tax payable. Understanding this 1-2 punch is really the secret to mastering your tax return. Okay, you've done all the hard work. You've gathered your slips, you understand the 3 pillars, now comes the final sprint to the finish line, meeting that deadline. Let's talk about the dates you absolutely cannot afford to miss.
For most people, April 30th is the big day. That's your deadline to file your return and pay anything you owe. Now, if you're self-employed, you get a little bit of a break on the filing part. You have until June 15th. But, and this is super important, your payment is still due on April 30th. Don't forget that part. And trust me on this, you do not want to miss that deadline. The second it passes, interest starts ticking up on any amount you owe. Plus, filing late can lead to some pretty hefty penalties. So the bottom line is simple: file and pay on time.
Wow, we have covered a lot of ground. But this whole thing isn't just about filling out a form correctly. It's about understanding your entire financial big picture. So why does this all really matter?
Because when you really get a handle on your T1, you're not just some passive taxpayer anymore. You become an active participant in your own financial life. You are literally taking charge of your financial future. And that's a really powerful shift in your mindset.
So here's my challenge to you. Now that you know about these 3 pillars, income, deductions, and credits. What's one small step you can take right now to start owning your financial future? Maybe it's just finally setting up a folder to track your charitable donations. Or maybe it's finally opening that RRSP you've been thinking about. Whatever it is, just remember that mastering your taxes isn't only about saving money, it's about taking control of your financial destiny.